7:23 Monday morning, Algoa from Breakfast with Wayne, Lee and Charlie T on the first full week day of lockdown. And we've got a guest, not in studio, but on the line. His name is Jason Hamilton. He's the guest lecturer in corporate and development finance at the University of Stellenbosch Business School and director at First River Capital to discuss life after lockdown, and more particularly for businesses, Lee.
Yes, Jason, good morning.
Good morning.
In a nutshell, Jason, what does life look like after lockdown for us as business communities?
I think it's a very contentious point at the moment, and I think everybody has an opinion about what it looks like. And I think at the moment the stories and the South African and global developments are happening so fast that picture also changes quite dramatically minute by minute. I think the long and short is that the global economy and South African economy will recover from this. It's just a question of when that recovery will start, and then, of course, how long that will take. I think from a South African point of view, we were already severely under pressure from a fiscal and from an economic point of view prior to this crisis obviously hitting. And this is definitely not helping us coming out of that. So I think we'll be feeling this for quite a few years to come. But that said, I think the consensus is that towards the end of the year, and I'm saying towards the end of the year because it's difficult to put a timeline to it, we will start seeing things returning to some sort of normal. For me, the concerning part is also with the recovery, we need the world to recover. South Africa doesn't trade in isolation. We're reliant on our African partners. We're reliant on the globe, the US, the UK, China, etc. And as we saw with China, they starting to start up the factories again, but they've got no one to sell it to because the rest of the world is in lockdown. And I think we're going to see that knock-on effect, even though we might emerge in the next 1 or 2 or 3 months from this. We need the world to also stabilize.
So we'll certainly experience the full impact on earnings and cash flow and employment and so on for far longer than the 3-week lockdown, I'm sure.
That's exactly the case. And I think that is also an interesting one because it comes down to also from a country perspective, but also from a per company perspective. So we've been looking very closely at companies and what sort of a model could work for how to predict which companies will be affected more than others. And I think there's 1 or 2 things that we can look at there. I think the best companies, and it doesn't come down to sectors because all sectors will be affected by this. There's no sector that's going to be immune to this. It does come down to how much cash reserves do you have? What did your trading profit percentage look like prior to the crisis, meaning how strong were you before you went into this? And then debt, the lower debt levels you had historically, the best position you are to come out of this. That also links through to banks in that the banks have all said they are going to be supportive and will assist and will align to government strategies to pull companies through this. But they've also been very clear they're going to assist companies in good standing, and it comes down to individuals as well, which means you probably had to be pretty up to date with your payments and be a viable company pre this. Now, I'm not sure what that will look like after, because there will be companies that will not come out of this in the shape they are now, and there's definitely companies that will not come out of this at all. And we saw that with a pretty big name like Edcon being very open about the fact that, one, they can't pay their suppliers. At least they're making the commitment that they can pay their employees for a period, but they might not open doors again. So I think that's a very big one that was in the press, but that's going to play out in the SME market quite significantly, and that is a difficult one to quantify. I think the banks are also at the moment a little bit in shock and probably running some numbers to see what that would look like. They can't do it alone. They will need the likes of government to also step in potentially, depending on how deep that crevice looks.
Jason, you're speaking of government. I'm sure government and business support is very much welcomed with the tax system we do have in place to assist businesses and firms and the like.
There is. I think government acted very quickly, and I think if we compare it to what happened overseas, we're following a very similar model to what a lot of the countries globally have implemented. I think the only difference is we're taking it slightly slower in how we're announcing it, and that's very simple in that we've got a very fine balancing act that we need to look at as a country about what we can afford and can't. So I think they have taken it in phases. I think it's a very good thing that the interest rate has dropped by the 100 basis points as of last week or just the week before. With inflation being intact or within the targeted band range, and that looking like for the next 3 or 4 years, if it will be maintained in that, there's a lot of room for further stimulus to be pushed into that. Estimate is probably around anything from 1 to 300 basis points that can still be used there to stimulate the market. I think that hasn't been announced yet because I think depending on what this looks like going forward, they want to keep that in the kitty to then release it when needed. I think also with capital available, there is obviously going to be reallocation of a lot of spending. So the budget that I think we saw earlier, there'll be a lot of revision to that over the next couple of weeks around when money will be allocated, moving away from all our expenses are important and key, but I think there will be some rebalancing taking place, and we saw some of that coming through already. I also think that with the government dealing with the banks, and I know the banks seem to be late to respond, but there's a lot that needs to happen in the background. And I think we should see in this week some announcements being made around capital ratios being lowered, some legislation being changed. I think it's changed already where banks can talk to each other to make sure there's a coordinated response. And the aim is to free up roughly about 300 billion rand to be made available to companies. But again, they will probably be allocated to individuals and SMEs mostly, I would estimate. But again, it's only going to be made available to companies that are in good standing. Hence, you're in trouble because of the pandemic, not because of any other reason. So how that will assist, but again, there's still going to be an impact.
All right, Jason, we've got some more questions and we'll get back to Jason. We've got news coming up next and we'll carry through some more questions that we have for Jason Hamilton on the line this morning.
Cloppers offers you the